need to know what's going on with the stock market, because whether you realize it or not, whether you are investing or not, it is affecting you. It's why your rent is going up. It's why your groceries cost more. It's why the rich keep getting richer while everyone else is wondering what the hell is going on. If you keep thinking, I want to get ahead, but I don't know where to start, this is it. I'm going to show you how to understand what's actually happening in the stock market, even if you've never looked at a stock chart before in your life, in plain English. And who am I to tell you this? Well, I went from $40,000 in debt to becoming a millionaire at the age of 30, and now I teach others how it's done. Okay, so the very first thing that we're going to be looking at is the big picture. What is the market overall doing? To do this, we're going to look at a few major indexes. These are basically just bundles of companies that give you a snapshot of how the market's performing. Is it going up? Is it going down? Is it trending sideways? First one you're going to look up is the S&P 500. This is basically just a collection of 500 of the biggest companies in America. Then we are going to look at the NASDAQ index, okay? A bundle of companies. These are tech heavy. Think like Google, Amazon. And then we're going to look at the Dow. Now, I don't check this one as much. It's a little bit more legacy. It's only 30 companies, but this one is another major market index. You can go and Google any of those indexes, and that's going to be your vibe check. The next thing we are going to look at is something called the VIX. This is basically the market's fear gauge. It tells you how nervous investors are. A high VIX means people are scared. A low VIX means things are pretty calm. And now we saw our last major spike in the VIX back in April when all of the tariffs were announced. Because there was uncertainty in the market, there was a lot of fear. And typically when we are seeing a high VIX or a high fear gauge, we are seeing stocks coming down. Why do we want to know this? Because when stocks go down, stocks are actually on sale. You can buy more with less. You can make more with less. One of the reasons why I was able to hit millionaire status so quickly is because I invested while other people were scared. And the VIX tells you when people are freaked out. Next thing we want to pay attention to is interest rates and things that the Fed is saying. Because the Fed, they set the interest rates. And when interest rates go up, things get more expensive, not only for you and me, but also for banks and businesses. So when we see rate hikes, typically the market dips. When we see rate decreases, typically the market goes up. Next, we are going to be looking at bond yields, okay? Specifically the 10-year treasury. This one is so underrated, but huge. I actually made a video going in depth on this the other day, so if you haven't watched it, I promise you, it's really good. Go back and check it out on my page after. Basically, bond yields tell us how much return investors are demanding to not invest in the stock market. If bond yields go up, it makes stocks less attractive, so typically stocks fall. If bond yields go down, typically money flows back into the stock market, pushing prices higher. Another big one to pay attention to is going to be earnings, okay? Every 3 months, big companies spill the tea on how they're doing financially. And big names like Apple, Amazon, or Meta can move the entire market, okay, if they beat or miss expectations. The next thing we're going to pay attention to is the headlines. Now, I don't need you to read every article, but start noticing things that talk about the inflation reports, the jobs numbers, geopolitical tension, because these can impact investor confidence big time. Now, if you want to start using this information to build real wealth, that's exactly why I put together my free How to Get Rich in a Recession masterclass. You can go right now. It's 90 minutes, absolutely free. Grab your spot through my website, link in bio.
It's what I wish someone had shown me when I first started.